Um, Good afternoon, ladies and gentlemen of the press. You are welcome to the Central Bank of Nigeria, where we will be discussing and taking on the communique of the 138th meeting of the Monetary Policy Committee that took place yesterday and today. The Monetary Policy Committee met on the 16th and the 17th of September 2021 on a relatively comforting note of a moderate global output growth recovery and improved global trade. The performance of the global economy in the first 2 quarters of the year and into the third quarter remained favorable, with positive outlook for the rest of the year. However, cautious optimism persists, driven primarily by mutating and more fatal strains of the virus and disparities in the progress of vaccinations across several countries. In the domestic economy, output growth performance continued to improve, signposting the positive impacts of the unwavering fiscal and monetary support by both the fiscal and monetary authorities to revive and sustain economic growth post-pandemic. The committee reviewed the developments in the global and domestic economic environments in the third quarter of 2021, as well as the outlook for the rest of the year. 10 members of the committee attended this meeting. Global economic developments. Committee noted the continuing rebound in the global recovery as several advanced and emerging market economies posted promising second quarter output growth figures, despite the uneven progress in vaccination coverage. The MPC noted that the uncontained spread of the virus continues to pose downside risks to global recovery in 2021 and into 2022. The MPC further noted that despite the strong output growth identified in some advanced economies, several developing economies were still lagging in vaccination progress. Members emphasized that the widespread availability of the vaccine remained vital to surmounting the pandemic and attaining full and all-inclusive recovery of the global economy. Despite the challenges posed by the ongoing mutation of the coronavirus, governments across the globe remain focused on easing business restrictions and resuscitating economic activities. Consequently, the International Monetary Fund, the IMF, maintained its aggregate projection for global growth in 2021 at 6%, but increased its projection for the advanced economies to 5.6% from a previous 5.1%, while that for the emerging markets and developing economies was downgraded to 6.3% from 6.7%. Price developments across several advanced economies has remained on a sustained uptrend and exceeding their long-run objectives. This is expected to continue in the short to medium term as against earlier forecasts that the upward shift was transient. Consequently, several advanced economies' central banks are currently considering early commencement of monetary policy normalization, even though policy rates adjustments are not expected in the medium term. Across several emerging markets and developing economies, inflationary pressures remained mixed, as some economies had much higher rates than their peers due to the lingering exchange rate pressures, capital flow reversals, high energy costs, supply chain disruptions, and poor response to policy stimulus resulting from structural bottlenecks. In the global financial market, committee noted that while demand for equities remained strong, an indication of renewed market confidence, gold price still maintained its post-pandemic high reflecting the hedging by investors against a possible rebound of the pandemic. Long-term sovereign bonds yields are expected to improve with the commencement of monetary policy normalization by advanced economies, central banks. Committee members, however, expressed cautious optimism for a gradual normalization of monetary policy by advanced economy central banks, as a sharp retreat of policy stimulus may plunge the global economy into a financial crisis again. This may also increase the uncertainty around the full recovery of several emerging markets and developing economies. MPC therefore called on the bank to put in place measures to moderate the likely impact of the normalization of monetary policy on the domestic economy. Domestic developments. In the second quarter of 2021, there was a significant improvement in the real gross domestic product, GDP, which grew by 5.01% compared with 0.51 and minus 6.1% in the previous quarter and corresponding quarter of 2020, respectively. This recovery was attributed to the non-oil sector, driven by a rebound in services sector and continued growth in the agricultural sector. The oil sector contracted further by minus 12.65% year-on-year in the second quarter of 2021, compared with minus 2.21% during the previous quarter. This deeper contraction was attributed to several factors, including declining crude oil production at two crude streams in the country, associated with leverages in two major pipelines, deteriorating oil production infrastructure, poor pipeline maintenance, and the need to comply with OPEC Plus production ceilings. The committee noted the moderate improvements in both the manufacturing and non-manufacturing purchasing managers indices, PMIs, which, though still below the 50% index point benchmark, showed a marked improvement over time. In August 2021, the manufacturing and non-manufacturing PMIs improved to 46.9 index points apiece, compared with 46.6 and 44.8 index points, respectively, in June 2021. This was attributed to an increase in new orders, driven largely by rising demand, uptrend in business activities, and further normalization of economic activities. Similarly, the employment level index component of the manufacturing and non-manufacturing PMIs in August 2021 improved to 49.4 and 48.8 index points, respectively, compared with 46.5 and 47.0 index points in July 2021. The committee expressed optimism that with the current level of monetary and fiscal stimulus, as well as efforts to increase vaccination and contain the pandemic, the Nigerian economy will continue to improve in the short to medium term. The committee reviewed the performance of the bank's various interventions to sustain the recovery of output growth and address downside risks to other external and domestic shocks to the economy. Interventions continued largely in the manufacturing, agriculture, energy, infrastructure, and micro, small, and medium enterprises, MSME. The bank's Anchor Borrowers program has cumulatively released the sum of 798.09 billion to 3.9 million smallholder farmers cultivating 4.9 million hectares of land across the country. For the 2021 wet season farming, the bank released the sum of 161.18 billion naira to 770,000 smallholder farmers cultivating 7 commodities on 1.1 million hectares across the country. Whilst harvesting for 2020 dry season under the program is rounding up, harvesting activities have commenced for the 2021 wet season cultivation. The Strategic Maize Reserve Program of the Central Bank of Nigeria has been useful in moderating maize prices, particularly by directly targeting large feed mills producers. Under its Commercial Agricultural Credit Scheme, CACS, The CBN has supported 657 large-scale agricultural projects to the tune of 708.39 billion naira. To support MSMEs across the country, the bank disbursed 134.54 billion naira to 38,140 beneficiaries under the Agribusiness Small and Medium Enterprise Investment Scheme (ACSMIS), and for the Targeted Credit Facility, the sum of 343.21 billion naira has been released to 726,198 beneficiaries, comprising 602 households and 123,468 small and medium enterprises. Under the Real Sector Facility, the bank released the sum of 1 trillion naira to 269 real sector projects, of which 140 are in light manufacturing, 71 in agro-based industry, 47 in services, and 11 in mining. Under the Healthcare Sector Intervention Facility, 103.02 billion has been disbursed to 110 healthcare projects, of which 27 are pharmaceutical, 77 hospital services, and 6 other healthcare service projects. The bank has also disbursed a total of 145.99 billion under the non-oil sector stimulation, not oil export stimulation facility. The CBN has revised the guidelines, working with Nigerian Export-Import Bank to improve access to the intervention and stimulate non-oil export growth in Nigeria. Under the National Mass Metering Program, 41.06 billion naira has been disbursed to 10 discos for the procurement and installation of 759,748 electricity meters. Under the Nigerian Electricity Market Stabilization Facility NEMS-2, the bank has also released the sum of 145.66 billion naira to 11 discos as loans to provide liquidity support and stimulate critical infrastructure investments to improve service delivery and collection efficiency. In furtherance of its intervention in the energy sector, the bank has also disbursed 39.2 billion naira to 6 beneficiaries to improve gas-based infrastructure to support the federal government's auto gas conversion program. The bank has also encouraged deposit money banks to participate in the solar connection facility to improve energy access in the rural areas. To promote entrepreneurial development, ladies and gentlemen, among Nigerian youths, the bank recently approved the implementation of the Tertiary Institutions Entrepreneurship Scheme. The scheme is designed to promote entrepreneurial activities and foster job creation among Nigerian youths. The committee applauded the continued moderation in headline inflation for the 5th consecutive month to 17.01% year-on-year in August 2021 from 17.38% in July 2021. The continued decrease was attributed to a marginal decline in the food component to 20.3% in August 2021 from 21.03% in July 2021. The core component also declined to 13.41% in August 2021 from 13.72% in July 2021. The MPC noted that headline inflation remained well above the bank's benchmark corridor of 6 to 9%, but expressed optimism that with sustained interventions by the bank, food production will continue to improve, thus moderating headline inflation further. The committee thus urged the fiscal authorities to build on earlier efforts to articulate a clear strategy to attract private sector investments while resuscitating critical infrastructure to improve the ease of doing business in the country. Members observed that the broad money supply M3 rose to 5.83% in August 2021 compared with 2.91% in July 2021. This was largely driven by the growth of net foreign assets NFA and net domestic assets NDA by 12.35% and 4.30% in August 2021, compared with 1.84% and 3.17% respectively in July of 2021. The growth in the net foreign assets was largely driven by increase in foreign asset holdings of commercial and merchant banks. The increase in net domestic assets reflects the boost to aggregate credit net, which increased to 8.14% in August 2021 from 5.71% in July of 2021. In the money market, the monthly weighted average interbank call and open buyback rates increased to 13.45% and 12.97% in August 2021 from 10.72% and 11.6% in July 2021, respectively. This increase reflected the tight liquidity conditions in the banking system during the review period as the bank curtailed excess system liquidity. The MPC noted the moderate improvement in equities market during the review period as the all-share index increased by 2.67% from 37,907.28 on July 30th, 2021 to 38,922.5 on September 14, 2021. Market capitalization also increased by 2.63% from 19.76 trillion naira to 20.28 trillion naira over the same period, reflecting improvements in investor confidence following the strengthening of output growth. The MPC noted that the capital adequacy ratio and the liquidity ratio both remained above the prudential limits at 15.2% and 41.7% respectively at the end of July 2021. The committee also welcomed the improvement in the non-performing loans ratio at 5.4% in July 2021 compared with 5.7% in June 2021. Committee thus urged the bank to continue to sustain current efforts, bring NPLs below 5% prudential benchmark. The committee noted the improvements in lending to the real sector following the introduction of the loan-to-deposit ratio in 2019. Industry gross credit increased by 6.63 trillion naira from 15.57 trillion as at end of May of 2019 to 22.2 trillion naira at the end of July 2021. The credit growth was largely recorded in the manufacturing, oil and gas, and agri sectors. The committee noted the significant increase in the external reserve, which rose to $35.97 billion at the end of August 2021 from $33.49 billion at the end of July 2021, representing an increase of 7.41%. It also welcomed the further increase to $36.03 billion on September 13, 2021. Our outlook. The overall outlook for both the global and domestic economies appear mixed. This is due to lingering uncertainties over the end of the COVID-19 pandemic, as well as continued mutation of the virus. The slow and uneven pace of vaccination in developing economies is also compromising the achievement of global herd immunity, thus imposing a considerable headwind to the attainment of the global growth forecast. Some advanced economy central banks have given guidance of intended commencement of monetary policy normalization as monetary and fiscal policy across major advanced and emerging market economies have remained robust. These would constitute a further headwind to the full and inclusive recovery of the global economy due to the likely rise in cost of capital as central banks commence upward adjustment of their policy rates. Overall, the global economy is confronted with more headwinds as paddy rice, maize, wheat, and sorghum, amongst others. Members applauded the relentless efforts by the bank and other collaborators in ensuring the eventual takeoff of the infracore as these will improve the business environment, attract new investments, and create new jobs in the Nigerian economy. The MPC further emphasized the importance of investment in transportation networks, power supply, and telecommunications, as these have a multiplier effect on other sectors of the economy. In addition to the InfraCore initiative, members urged the fiscal authorities not to relent in other complementary infrastructure initiatives, such as public-private partnerships and engagement of Nigeria's huge diaspora through the issuance of diaspora bonds to fund specific projects. The MPC noted the moderate improvement in the equities market and commended the sustained investor confidence in the Nigerian economy. The committee, however, called on the federal government to continue to improve the ease of doing business in Nigeria, to retain the current patronage of the Nigerian economy by foreign investors. Members applauded the continued resilience of the banking system, noting the progressive decline in non-performing loans ratio and broad improvement in all banking system parameters, despite the downside risks posed by the pandemic to the smooth running of businesses in Nigeria. While the committee was cognizant of the credit risk associated with lending in the current economic climate, it urged Nigerian banks to extend more credit to businesses and consumers to facilitate a seamless recovery of output growth, reduce unemployment, and stabilize prices. On the management of the exchange rate, the committee applauded the bank for improving foreign exchange supply in the economy to meet legitimate business and consumer demand. Members thus urged the bank to take further steps to restrict the activities of unauthorized and illegal foreign exchange dealers in the foreign exchange market, stating that all foreign exchange transactions must be necessarily conducted at the investors and exporters window to ensure transparency and stability. The committee thus called on the bank to intensify surveillance over foreign exchange sales and utilization by commercial banks and customers to ensure that operators adhere to stipulated guidelines set by the CBN. The bank thus maintains its resolve to continue to restructure the foreign exchange rate market and will pursue all recent policies targeted at sanitizing the market to improve transparency and proper functioning and eliminate illegal FX dealers in the country. On government revenues, members urged the federal government to improve its tax collection in order to reduce its dependence on oil revenues and reduce its exposure to counter-cyclical shocks. The committee emphasized the growing need to improve the agricultural value chain, particularly in key commodity products like cocoa, palm oil, and cashew, to diversify the country's export receipts. It therefore called on the bank to support manufacturing initiatives that could achieve this objective. The committee applauded the bank for its resilience and robust efforts in managing the downside risks to growth and the upside risks to inflation since the outbreak of the pandemic, while charting a stable path for the economy to continue to expand its potential capacity through investment in infrastructure. Overall, MPC assessed the headwinds and tailwinds to growth as well as the upside risks to inflation, noting the immense efforts by both the monetary and fiscal authorities to achieve a substantial recovery in output growth and decrease in inflation. The committee urged the Presidential Task Force on COVID-19 to intensify efforts towards procurement of more vaccines and the vaccination of more people to ensure that herd immunity is achieved. Committee's decision. MPC expressed delight at the robust recovery of output growth during the second quarter and the continued decline in inflation in August 2021. Members, however, reiterated the need to put in place further measures to drive down inflation and improve real return on investment. MPC noted the unequivocal importance of credit growth to the sustained recovery of output and the moderation in price development as supply improves. It thus called on the bank to maintain adequate surveillance on banks to ensure compliance with its extant credit policy, while ensuring that they are not unduly exposed to credit risks. The committee also noted the relevance of the bank's suite of interventions to overall system credit, urging the continued use to fund sectors with high employment-generating capacity. MPC weighed the pros and cons of tightening, holding, or loosening the stance of policy, noting the impact on output growth, price development, unemployment, and exchange rate. Members felt that tightening will contract the current level of system liquidity and thus reduce demand pressures in the foreign exchange market. Feels that with liquidity ratio at 30, CRR at 27.5, that this is a tightening measure that should be maintained for now. This will, however, raise the cost of credit and reduce the volume of credit to the private sector. On loosening, the committee felt that this would lower retail interest rates and improve the ability of obligors to repay their obligations with a complementary reduction in NPLs. The gradual downward movement of inflation may, however, be compromised if policy accommodation is increased, leading to a further widening of the negative real interest rate and thus exacerbating capital outflows as investment in Naira-denominated assets become less attractive. Members considered that a hold stance would allow the current recovery of output growth and decline in inflation continue smoothly, thus gradually moving the economy to a sustainable path before adjustments are made to the stance of policy. Based on the above considerations, the MPC made the decision to hold all policy parameters constant, believing that a hold stance will enable the continued permeation of current policy measures in supporting the recorded growth recovery and macroeconomic stability. The committee therefore decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted as follows. 1, retain MPR at 11.5%. 2, retain asymmetric corridor at plus 100 and minus 700 basis points around the corridor. And retain the CRR at 27.5%. 4, retain liquidity ratio at 30%. I thank you most sincerely for your attention.
Thank you, Governor. And that was the communique of MPC meeting held today. We'll go straight to the questions, and as usual, you tell us your name, the institution you represent, and then your question, but please just keep it simple.
Good afternoon, Governor. My name is Nduka Chejin of the Nation newspaper. There have been complaints everywhere that since you stopped selling dollars to BDCs in Nigeria 8 weeks ago, the rate at the segment of the market has skyrocketed. What are your views, and do you have any update on this? Secondly, there are also press reports that the CBN is investigating Aboki FX for certain FX infractions. How true is this?
Yes.
Good afternoon, Governor and members of the MPC. I'm Nancy Naji, the anchor of Moneyline with Nancy. At the CIBN meeting just a few days ago, you made an announcement of the establishment of the Nigeria International Financial Center, NIFC. I would like that you provide updates on that, on the establishment, and some other projects that the CBN is spearheading, projects such as the Commodity Exchange, the National Arts Theatre, the Infrastructure Company, and most recently, eNaira. Thank you.
Good afternoon, Governor and the members of the MPC. My name is Uche Usim. I work for the Sun newspapers. Sir, basically, we can see that inflation is going down. It's showing signs of coming down. So I want to ask you, what do you think is actually bringing this about, and what will you do to stabilize the economy and keep it that way going forward?
Good afternoon, Governor. My name is Leah Katumbabatunde from Nigerian Television Authority. Independence Day is just a couple of weeks away, and the e-Naira is scheduled to take off on that very same day. So I'm hoping you'll be able to throw more light on what will be the status of the fiscal Naira, and how will these be affecting the digital currency space in Nigeria. And also, still with the e-Naira, the CBN chose a foreign company to partner her. And most people will be wondering why we're not looking locally into the local industry. If you could speak more on that too. Thank you.
So, Governor, I have two questions that they're sending. One from Sunday Michael of Daily Trust. In your remarks at the CIBN conference earlier in the week, you disclosed plans by the CBN to establish the Nigerian International Financial Center, NIFC, next month, in addition to the anticipated takeoff of the InfraCo, also in October. Could you highlight the benefits of the NIFC? And then from Collins Wednesday of the Nation newspaper, he said, last week, the bank issued a statement disclaiming a circular purported to have been issued by the bank on the alleged conversion of domiciliary account holdings into Naira. What is the bank doing to quell speculations about the exchange rate between the Naira and the US dollars? And Governor, this just came in now, but it's just similar to question one asked by Chejina Nduka. And it's just about FX. So you can just take that together. FX applied to the banks. And that's from Francis. Thank you.
Thank you very much. The first question is about asking for updates on the BDC, our decision to stop allocating dollars to the BDCs, and the fact that as a result of that decision, the exchange rate in that sector of the market has skyrocketed, and what are our views. When you ask me my view is, number one, that the only exchange rate that I recognize today in the Nigerian foreign exchange market, which is a dominant market, remains the investors and exporters window, which is a market that we expect everybody that wishes to procure foreign exchange, or somebody who wants to sell foreign exchange, go to your bank. The investors and exporters window will attend to you. I'm sorry to say that I do not, and I do not intend to recognize that there are any other rates in the market. And I will give you explanation. 8 weeks ago, yes, you are very correct, we did stop the allocation of foreign exchange to the BDCs. Indeed, we began to ask ourselves, why did we wait for so long that we continued to do this? The reason is because Nigeria remains the only country on earth. The Central Bank of Nigeria remains the only central bank in the world, as at 8 weeks ago, that would dip its hands into its reserves, our commonwealth, and you pack dollars and begin to sell it to borrow the exchange operators in the market, all in an attempt to stabilize foreign exchange rate in the market. I continue to recall even when I was at the other side, when I was a regulated entity, or I was running a regulated entity, that when exchange rate begins to go up at this so-called market, the central bank begins to call. I remember a deputy governor in central bank calling me at Zenith Bank saying, "Governor, can't you see that the black market rate is going up, and we find out that your bank is not coming to take dollar to sell. Come to take dollar to sell and pump into a black market and illegal market." That is what we, in this country, central bank, we decided to adopt as a way to stabilize exchange rate. For me, it's a wrong decision. And we should really applaud ourselves that we decided that this will stop. And it has stopped for good. The reason I say this is because the Bank of England does not sell dollar to borrow the change, even though they exist. The Fed does not sell dollar to money, other FX dealers in the United States. Indeed, nobody talks about borrow the exchange rate on the streets of London. If you go to Oxford Circuits, the exchange rate that a borrow the exchange operator will give to you on Oxford Circuits is certainly different from the rate that a borrow the exchange will give you in Camden area of London. Yet, nobody makes any emphasis, ever mentions the rate of borrow the exchange in the city of London. So, it really beats my imagination that Nigeria carried on with this kind of practice that tended to support illegal activities of people who are involved in graft and involved in corrupt practices. What do? Go collect naira. Instead of collecting naira as bribe, you tell the person to exchange it to dollars so you can have small packet of dollars in your pocket. And yet, Central Bank of Nigeria, in an attempt to moderate rates in that market, decides that it to take dollars from our reserves and begin to support the corrupt tendencies of people. Or is it about, even through its activities, that we have unwittingly supported activities of those who illegally buy foreign exchange from this illegal market, carry them in aircrafts out of the country, and go to buy arms and ammunition, and bring them back into the country and conduct crime, whether it is Boko Haram, whether it is kidnapping, whether it is all sorts of nefarious activities. We, Central Bank, take our country's dollars and sell to people to go and buy arms and ammunition to come and hurt us. That is what we're saying that people want us to continue to do. We cannot do that any longer. We can't. What we're saying, if you have any legal, legitimate business you want to conduct, please take your business to a bank. You want to travel? Go to your bank. They will sell you FX. You want to pay school fees? Go to your bank. They will sell you FX. Pay medical bills, which are some of the reasons that people give for going to borrow the change. Please go to your bank. Indeed, I want to put it on record. If the amount you want is even above the limit that is recognized, and we find that the reason you are making those demands is legitimate, your bank will speak to us and will give you more than what is even the limit. Don't go elsewhere. Go to your bank. In the same vein, you have dollar to sell, go to your bank. We don't recognize and we will not see it again. That is our position. And people are saying, oh, banks are not selling. We will continue to monitor the bank. And I have said it, if anybody sees a bank, you go to your bank, they don't sell to you, we advertised an email, we advertised hotlines, and we said you should call the bank. Call us. We would intervene and ensure that that bank sells to you. However, if you go to a bank with fake ticket, fake visa, fake passport, we have told them not to sell to you. If they sell to you mistakenly because you hoodwink them to sell to you, and after 2 weeks, they check and find that you canceled your ticket or your visa is fake, they will call you because you are their customer. They have your BVN, they have your number. They will call you to return the dollar. If you do not return it, they will place your name on their website, your BVN on their website. We will pick those details. We will send them to EFCCs and other crime agencies. They will pursue you. You must return the dollar because you cannot acquire it illegally. That is our position. We conducted a study. One of the banks, in one day, sold to 52 people who said they wanted to travel. After 2 weeks, they went to check. 40 out of the 52 have canceled their tickets. How could you have a situation where close to about 70% or 80% of people who went to a bank to buy business travel allowance on the excuse or reason that they want to travel, banks sold to them, turned back, and then went and sold it to a black market because they wanted to enjoy the arbitrage. They were asked to return it, and we're going to pursue you if you are involved in these nefarious activities. You want to do legitimate business? Conduct a legitimate business. We will be with you. That is on Bureau de Change. We are not going to go back there again. Now, Anaboki FX. Yes, unfortunately, Central Bank, our colleagues here wrote a memo to banks and asked those banks to provide information about Aboki FX. We have been studying the activities of Aboki FX in the last 2.5 years. There was a particular time I asked our colleagues to call the so-called owner of Aboki FX, that we want to engage him to understand his model, his basis, and how he came about advertising those rates. We find him as somebody, a Nigerian, who lives in England and conducts this nefarious and criminal activity on our economy. It is an economic sabotage, and we will pursue him wherever he is. We will report him to international security agencies. We will track him. Mr. Oniwide, we will find you, because we cannot allow you to continue to conduct an illegal activity that kills our economy. For your information, our preliminary findings reveal the following. First, but let me make it clear that if you are running a legitimate business and following our rules at the Central Bank for use of financial system, there is nothing to worry about. But but for those who think they are smart and they want to continue to sabotage the efforts of the Central Bank in running this economy for the good of Nigerians and this government, we will make life very difficult for you. Your time has come. We will continue to do our jobs of safeguarding the financial system for the betterment of everybody. Now, on Aboki, the company was registered in the UK in November 2015 and is owned by one person who claimed in his regular filings that there are other people with significant interest in that business, but he does not want to name them. So, who are these significant persons behind him? Why are they hiding? This is on UK's filing records, and we will go there and conduct those investigations. Since inception of this business, he has continued to file the same accounts to the UK government, the same £1,000 cash at hand. That is his balance sheet. £1,000 cash on the one side of the balance sheet, and then same 1,000 total net assets, same 1,000 shareholders' funds, balance, debit and credit, 1,000 both ways, consecutively for 4 years. Yet, here in Nigeria, he and the company has over 25 bank accounts with about 8 banks in both Naira and dollar with significant turnover, also showing him simply milking the system through speculative activities on the Naira and collecting his proceeds in cash through a particular ATM in London. Our preliminary findings suggest that this website was built and is being used purely for the purpose of foreign exchange manipulation and speculation. They get Naira loans, use it to purchase dollars, take a position, change the rate over a given period, sell the dollars, they purchase, and make a profit. This is completely illegal, it's unacceptable, and we will pursue them. Now, on Mr. Olumide, another finding also revealed that Mr. Oniwinde, right, the owner of Aboki FX, is an illegal FX dealer. Between February 2020 and May 2021, he had inflowed and sold tens of millions of naira in FX to several Nigerian companies, and we'll find those companies as well. In contravention of our FX laws, because he is an FX dealer, illegal FX dealer, he directly benefits from the rates he quotes daily on his website. We are finalizing our investigation and must warn these companies that patronize him that they are also going to face our wrath. A few questions. Has Nigerians ever asked how exactly Aboki FX collects his data that he publishes on his websites? How many BDCs can claim that they have either seen a staff of Aboki FX come in to ask for daily rates? Or how many BDCs send daily returns on exchange rate to Aboki FX? How then do they determine what the rate is and they post them illegally on their website? In which other country will an unlicensed single person be the one that sets exchange rate in that country? How come he sets exchange rate of our own currency? Why is he not setting exchange rate for pounds and dollar, or pounds and South African rand, or pounds and Ghana cedi? Why target Nigeria? And yet you are a Nigerian. You choose to live in London, enjoy all the spoils in London at the expense of the blood of Nigerians. You will pay for it. The CBN Act Section 2 does make it clear that only the central bank can determine the value of the naira. And yet, a single unscrupulous individual who lives in London continues to manipulate the rate of the Nigerian or rate of for Nigerians, continues to make huge profits, continues to collect these profits in cash ATM in London, while other Nigerians suffer the consequences of these actions. We will not allow this to continue again. What kind of registration does he have that allows him to do the kind of business he's doing? People should tell me. How exactly does he collect this data? Do you know any BDC that supplies this data? He should come out and give us this information. If he doesn't come out, we will find him. I have given instruction to our experts to go after his website. And let it be clear, we will go after him because we cannot allow this to continue. Since inception of this company in 2015, he kept filing same cash at hand and net assets and shareholders' funds. You may go ahead and check his UK filings. Yet millions of naira and thousands of dollars go through his account. So that is the story of Aboki FX, and I hear that he's making news in social media. I'm not on social media, but let him come and meet me in Central Bank. Let him show his face. Those who feel they want to support him, to fight me, come out. Let's fight. 3. Nancy, you asked questions that 2 days ago at the CIBN conference. That is true. We talked about the Nigeria International Financial Center. That is true. But let me start with the eNaira side of it. Yes, eNaira is scheduled to launch on October 1, 2021. and we have all the approvals and mandates to launch on October 1. But it is important to understand that the e-Naira is not a one-off. It is a journey that starts on October 1. October 1 marks the beginning of e-Naira journey. On October 1, a Nigerian should be able to download the e-Naira app from either Google Play Store or Apple App Store, onboard themselves, fund their e-Naira wallets using their bank account or with cash at a registered agent location, and conduct transactions such as transfers and purchases at merchants' outlets that have onboarded. Simply, you have, say, 1 million naira. Before October 1, let's imagine a bank has, say, about 10 billion naira in his account. That is physical naira in his account. We can decide we'll move, say, about, out of the 10 billion, move 2 billion in electronic e-wallet into an e-wallet for the bank. So if you're a bank customer and you have, say, 10 million naira in the bank, for your comfort of spending and making purchases, you could tell the bank to load 2 million out of your 10 naira into your wallet. So your bank balance sitting in physical cash drops to 8, while your e-wallet that you carry carries 2 million naira. With that, you can make purchases both within and out across the country. There are so many variants of the e-Naira, but this is where we will start, because we're not going to pretend that there are no risks in opening your system up. We will look at the various products, determine the risk, determine the best way to mitigate the risk, and before we now open it up more and more. But it's a journey that we have determined and we have decided we will start on October 1, 2021. Now, on the BEATS, we chose BEATS as a partner, BEATS Incorporation as a partner. In some other clients where they are just like, they have their business, they have their software, and they earn a living, and then they earn a money. But we chose that they will establish their company in Nigeria. The Central Bank of Nigeria will own majority stake, substantially majority stake in that company. So it is not my company, as people have said, that I went to the Caribbean to set up a company for one small unknown company. It's a company that will be established in Nigeria. You will see it on CAC, and it will be majority holdings will be the Central Bank of Nigeria. So as with all attempts at choosing contractors, the CBN went through a rigorous vendor selection process in line with the Public Procurement Act, conducted by 7 departmental directors and a deputy governor. 10 companies were evaluated based on the following criteria: A, technology ownership and control; B, implementation timeline; C, efficiency and ease of adoption; D, support for anti-money laundering and combating of terrorism; E, platform security; F, interoperability; G, implementation experience. BEAT came first with an average of 82.3% on the scoring grid. The scores for the other 5 bidders are BEAT 82.3, Interstellar 76.9, Zimbabwe 76, G&D 76.3, MTech 66.4. Why did you choose BEAT? BEAT is a leader in the central bank digital currency space, with subject matter experts at the intersection of technology and policy. The company deployed its flagship product in regulated, collaborative, multi-stakeholder environments, including a live CBDC in 4 Caribbean countries and digital currency deployments in Barbados and Latin America. The BEAT DCMC for Eastern Caribbean Central Banks was vetted by IMF and World Bank The deployment in the Caribbean countries is driven by social impact, including financial inclusion, through special features for the unbanked, on-off, ramp-through, and accessible agency network. So we went through a process because we believe they are subject matter experts. Who owns them? Overstock, which has majority stake in the company, is a 20-plus-year-old publicly traded company on NASDAQ with over $200 million invested in blockchain technology-related businesses. 2 Pillion Ventures, also a 35-plus-year-old venture capital company, managing OSTK investments outside Nigeria. Bit is the first company to digitize a national currency on a blockchain, thus creating the first synthetic CBDC with support of the Central Bank of Barbados, Governor, and the Minister of Finance. That system is still in operation today and is integrated with the largest bill payments processor in that country and both for the major telcos. So we went through the process, and we thought that it's important for us to provide this explanation so as to dial some of the tensions that people, or comments that people are making about the process that we went through in choosing this company. Now, on the other projects that we have, first on National Arts Theatre. National Arts Theatre is a treasured asset of the country. The first time the asset was used was in Festac 77, when the Nigeria hosted the Nigerian Festival, the Festival of Arts and Culture. Different people came from different parts of the world. And after that festival, different concerts, global concerts, all held inside that main bowl. The main bowl can seat 7,500 people at a go. But unfortunately, due to bad maintenance, poor maintenance standards, we allowed the edifice to rot. In our own attempt to find an international convention center, and I dare say that if well managed and well run, National Arts Theatre can withstand any international convention, can host any international convention or summit of even heads of states from different parts of the world. But we allowed that edifice to rot. The Bankers Committee, about 3 years ago, at one of its retreats in Djibouti, took on initiatives from the creative industry, particularly the youths, and we're engaging one of the youths at that time, and a musician. And from there, the great ideas came up, and we thought about how to assist our Nigerian youth in music or in movie from going abroad to shoot their films for their movies and their music. We also thought about Nigerian young people who are endowed with the creative talents of being fashion people. We said there was no need for us to see them travel abroad to go and make their clothing and bring them back home to sell. We might as well set up a hub. So that's why we came about setting up 4 hubs around the National Arts Theatre to create economic activity around this magnificent edifice. The Bankers Committee on its own decided that it will fund that initiative. The first phase of that, which has been awarded to GCAPA, started in March this year. And I'm sure if you go to National Arts Theatre, you'd have seen at least there are some changes. At least you see some scaffolds around the place because work is ongoing. Aside from that, contract has also been awarded for the establishment of 4 strategic hubs, one for music, for movie, for IT, software developers, and then creation of startup hubs, as well as fashion. This is going to be costing the Bankers Committee, not the central bank, not the federal government, lots of money, tens of billions of naira, as contribution of the banking industry to saying that we want to support our youths in this country. That is the essence. We are hoping, work is going on, that by November 2022, this magnificent edifice will come alive. It will be fenced. There will be a lot of security around it, 24-hour electricity to be provided in that center, and then create economic activity, reduce the incidence of our people going abroad to conduct simple creative activities that can be created within the Nigeria, and then unleash the creative talent of our youth on our people. That is the idea behind it. And we believe that by November 2022, by the special grace of the Almighty, President Buhari will launch that center. Now, on Infraco is also another project that the President graciously gave approval for the Central Bank of Nigeria, the NSIA, as well as the African Finance Corporation, AFC, to act as equity holders. In the first phase, our plan is to put in place equity of 1 trillion and then 14 trillion as debt. The essence of this is for us to be able to raise about 15 trillion naira first phase to fund Nigeria's infrastructure. And from what work that has been done so far, at least 50% of that sum is already existing within the banking industry and the pension fund industry in Nigeria. All we're saying is that there is no need for us to encumber the balance sheet of the federal government that is already heavily encumbered. That with the instrumentality of the Infraco, the infrastructure of this country can be developed again. Even 15 trillion, we dare say, is very small, but we want to start with this. There are a couple of projects that have been thought about, but before we go into project execution mode, we have appointed KPMG as the transaction advisors. And after that, we appointed 4 asset managers that went through a rigorous process of vetting. I understand over 100 of them indicated interest to be asset managers, and out of which we chose 4, Salam Infraworks, Chapel Hill Denham, African Infrastructure Investment Manager, and the last one called AAA Consortium, even though we're still looking at AAA Consortium based on issues bordering on conflict of interest in the company. Some of the projects that we contemplate at this time have to do with Lagos-Ibadan Express Road, Second Niger Bridge, completion, Abuja-Kano, Abuja-Kaduna, narrow gauge, and all. Yeah, these projects are currently projects that are receiving funding under the PIDF through the NSIA. Luckily, NSIA is part of Infraco. But we're saying that Infraco has been established with bigger pie in the port, and that NSIA, under PIDF, and Infraco can work together to unleash this kind of funding on the infrastructure of Nigeria. And we think that it will be good for our country. We are also hoping that by October 2, the board is being constituted at this time. It will have 11 persons in the board of directors comprising 2 members nominated from the CBN, 1 from AFC, 1 from NSIA, the DG of Debt Management Office, DMO, the representative Ministry of Finance, 1 person representing the Governors Forum, one person representing the north, and 1 person representing the southern part of the country, and then 1 person representing members from the international community, just to let people know that we're truly ready for the world. There will be a very small management team of people, maybe not more than about 5 people, who are going to act as superintendents to the asset managers and run this fund in a way that is transparent, and the whole world will know that Nigeria is truly ready for business and development of its infrastructure. On that, I believe October 2 will debut. Commodity exchange. We've had issues on commodity exchange. We've been talking about problems and logistical problems about moving food from farm to market. The project, the technical team has been on this since January of this year. We are hoping that by the end of this year, we should really begin go into project execution mode. We are engaging all the agencies of government that are involved in this process. And even if there's a delay, I believe that before the end of the first half of next year, we should get through with establishing it. so that we can unlock the potentials in the logistics of delivering food from farm to market in Nigeria. On NIFC is a novel idea, the Nigerian International Financial Corporation. Indeed, we started to receive interest in private sector companies that are saying they want us, that they have some land that can be designated as the free trade area, working with NEBSA. We have some in Abuja, some in Lagos, and some in some other parts that we're looking at. But we're going to think about which one is most efficient, which one we think is better, and better serve Nigerians, and where the international community that this center is meant to serve, they will find it easy, expedient, and better for them to operate as a business that is operating outside Nigeria, even though they are sited within Nigeria. What that does is that it helps to improve economic activity in the country. It helps to boost flows of foreign investments into the country. And we think that there are tremendous benefits from this project, and that Nigeria, being the largest populated country in Africa, Nigeria, being the largest economy in Africa, deserves to have an international financial center, and we are determined to achieve this. Uche raised some issues about GDP, congratulating us. GDP is good, looking good, and that inflation is trending downwards. Yeah, we're happy that this is happening, happening so fast. And you will all recall that as a result of the pandemic, the world went into a lockdown. This lockdown resulted in locking down of global economy, supply chains, everything were locked down. Nigeria, just like every other economy, went into a recession. During the second quarter of 2020, GDP was minus 6.1. Third quarter, 3.62. Fourth quarter, luckily, we escaped recession, and it was 0.1. Fourth quarter. First quarter 2021, 0.5, and second quarter 2021, 5.01. If you imagine the leap from below the river of minus 6.1, right, to minus 3.6, to positive 0.1, to 0.5, and to 5, means that a lot of work has been done that brought us to where we are today. But I must say that the 5.01% came primarily as a result of base effect that will dissipate. And that is the reason we are not going to make any promise that the rate of 5% is going to continue. But we will see to it that we end the year, like we said, our CBN estimate is about 2.86% average for the year. We will continue to do what we are doing that resulted in this more aggressively. And I would let you know some of those things that we have done. On inflation, we had almost close to about 21 months persistent increase in inflation rate, and went to as high as 18.7 or so. And that's about 5-6 months ago. From about 5-6 months ago, we began to see a deceleration in inflation rate, and by August 2021, it came to 17.01. One thing that is very peculiar about the deceleration in August 2021 was that we saw that both the food component and the core component both coming down. And it means that some of our interventions that were put in place, particularly in the area of food, is beginning to yield dividend. We are now entering the harvest period, hopefully, and we believe that inflation will decelerate further and more aggressively as we move towards the end of the year. But what did we do? I had read some of those things in the communique, but I'll repeat myself so that those who appear to be doubting Thomases will know that on the output side, what monetary policy said is that our objective is to primarily price our monetary stability, but that is conducive to growth. So it's like a difficult one. If you want to stimulate growth, you have to spend. If you want to moderate, if you want to achieve price stability, you have to keep liquidity tight and do other things to moderate price, improve food production, and the rest of them. So for what sometimes you call objectives that are somehow conflicting in the opposite direction. So that's why we're happy that things are looking good, and we would continue to do some of those things that we've done in the past. But I think, what are those things? We have aggressively taken actions that have boosted consumption and investment expenditure in Nigeria, particularly. Our targeted credit facility, where we gave loans to close to almost about 500,000, if not more, of households and small businesses in order to stimulate consumption expenditure, is one good one. Or is it our AXMIs, where we are giving close to almost about 200,000 people loans to acquire business equipment, his hairdresser, his block making, or is somebody who is into poultry, or who wants to buy small agric equipment for him to be doing harvesting and threshing and the rest of them. These are all boosting expenditure, and that has helped to accelerate output growth in the country. And I'll give a few numbers. For instance, 785 billion naira has been disbursed to over 3 million. I talked about it in another Dan Kobura program, cultivating about 4.7 million hectares of land. Okay? The bank also released about 900 billion to 256 real sector. I read it about out of our 1 trillion facility. 97.8 billion naira has been disbursed to over 103 healthcare projects, out of which 26 are pharmaceutical and 77 are hospital projects. Under our targeted facility, we've disbursed over 318 billion naira to 679,422 beneficiaries, comprising 572,182 households and 107,000 micro, small, and medium enterprises. Under the electricity market stabilization facility, 120 billion has been granted as loans to 9 discos, as loans to cover their financial obligation to upstream market participants. Also under the mass metering, 36 billion has been released to 9 discos for the procurement of installation of 656,000 electricity meters. 252 million naira has been disbursed to 5 beneficiaries awarded grants under COVID and the rest of them. 7 billion has been disbursed for procurement and installation of 100,000 solar, actually more than 7. We're approaching almost 20 billion for solar business and the rest of them. So these are some of the things that we have done. So for me, no wonder that this is happening, but we will just, luckily MPC gave management the mandate that we should do more and more of this so that we can see the direct correlation, because we can see direct correlation into output. Of course, on inflation, MPC also gave mandate that we should try as much as able to see how we can manage system liquidity in a way that there isn't excess liquidity that will create problem for the economy, particularly people who want to deploy liquidity into non-employment generating and output stimulating sectors of the economy. Will constrain them. Whereas we will continue to do our interventions in areas in the agriculture, in manufacturing, healthcare, that we believe will be employment stimulating and output generating sectors of our economy. I think I've tried. I want to thank you very much. See you guys in 8 weeks.